Hi guys, welcome to my channel. Today is Sunday the 24th. I'll be walking you through Bitcoin. I wanted to touch base on Bitcoin because I feel like it's an asset class that needs to be mentioned, even though right now I'm focusing a little bit on stocks. There's a place for Bitcoin and we can have that discussion, and I'd like to hear your thoughts in the comment section on crypto in general. So just make sure that the subscribe button is working by clicking it. Also try and check if the thumbs up button is working. So if you like this content, just click on it and see if it works. Let's get to it. So right now Bitcoin is trading at 31,752. It's very volatile, so the number will change very fast. So we can see today it's down by about almost 3%. One good thing about Bitcoin is it trades 24/7, unlike the stock market. The stock market will trade in the designated trading hours, and that's it. Of course, there's after hours trading and early hours trading with, let's say, Webull and other platforms, but for the most part Bitcoin is 24/7, so you can buy in and get out whenever. And I'll walk you through a little bit about how the rally has been for Bitcoin. So you can see for the week it's been down by almost 11%. For the month it's been actually up by about 33%. 3 months it's been up by about 143%. For the year about 276%. So you can compare it with any other asset class, and it by far outperforms every other option you can think of. The only one thing to notice is the amount of volatility is very high, and I'll talk a little bit about why this is the case right now. So back in the day when people started talking about Bitcoin, and we'll talk about the history a little bit in a short while, you can actually see the price over time just goes up like crazy. And it's because back then it wasn't popular. People are still trying to understand how it works. I remember when I first heard of it, I think it was in 2009. It was price was like cents. So you can imagine from that point to now what a big difference that is. And I will go to one site that I've always liked reading through. It's bitcoin.org. It talks a little bit about Bitcoin in detail for beginners. So if you don't know anything about it, I'm sure you've heard of it, but Bitcoin is an innovative payment network and a new kind of money. And then we go down here, and it talks a little bit about how to get started. Bitcoin uses peer-to-peer technology to operate with no central authority or banks. Managing transactions and issuing of Bitcoins is carried out collectively by a network. Bitcoin is open source. Its design is public. Nobody owns or controls Bitcoin, and everyone can take part. Through many of its unique properties, Bitcoin allows exciting uses that could not be covered by any previous system. So you can see peer-to-peer transaction, worldwide payment, lower processing fees. And I think when you go to how it works, it actually tells you a little bit more. So I highly recommend you understanding asset class or something you're investing in first before investing, and also trying to weigh the pros and cons, and then from there you can make an informed decision in investing. Just a quick reminder, I'm not a financial advisor. Do your own due diligence, invest in Bitcoin and cryptocurrency at your own risk. Let's continue. So how does it work? So the basics for a new user. As a new user, you can get started with Bitcoin without understanding the technical details. Once you've installed a Bitcoin wallet on your computer or mobile phone, it will generate your first Bitcoin address, and you can create more whenever you need. You can disclose your address to your friends so that they can pay you, or vice versa. In fact, this is pretty similar to how email works, except that Bitcoin address should be used only once. So you can use like Coinbase, Gemini, Binance. There's so many platforms that have wallets, and one thing to remember is always make sure that you secure your keys and they're private. If you need to get funds, is when you provide the address, but make sure you have the keys that protect your wallets very safe. And that's why most people also prefer having like a cold storage option whereby it's not accessible over the internet. So there's so many ways you can store your Bitcoin securely, because it's been reported in the past people dupe you to provide your address, or they'll figure out a way to trick you to send them Bitcoin. So be very careful, because it's something new. You have to be very aware so that somebody doesn't take advantage of you and you lose your money which you've invested in something like Bitcoin. So the blockchain is a shared public ledger on which the entire Bitcoin network relies. All confirmed transactions are included in the blockchain. It allows Bitcoin wallets to calculate their spendable balance so that new transactions can be verified, thereby ensuring they're actually owned by the spender. The integrity and chronological order of the blockchain are enforced by cryptography. So, this ledger is very important because you can actually go and Google and see every single transaction of Bitcoin, and that's the essence of why blockchain technology is very good, because even though there's a little bit of anonymity, you can actually trace things, where they're going, who they went to, and pretty much you wouldn't know who owns it, but you can try and kind of follow the money, I guess, if you're really good at cryptography. If let's say the law enforcement had to maybe follow up with some illegal stuff going on, and maybe the payment system was through blockchain, I'm sure they will probably figure out somehow on how to use the technology to track down the paper trail. But yeah, it's very, very secure in my opinion. So private key. A transaction is a transfer of value between Bitcoin wallets that gets included in the blockchain. Bitcoin wallets keep a secret piece of data called a private key, or seed, which is used to sign transaction, providing a mathematical proof that they have come from the owner of the wallet. The signature also prevents a transaction from being altered by anybody once it's been issued. All transactions are broadcast to the network and usually begin to be confirmed within 10 to 20 minutes through a process called mining. And let's talk a little bit about mining. Mining is a distributed consensus system that is used to confirm pending transactions by including them in the blockchain. It enforces a chronological order in blockchain, protects the neutrality of the network, and allows different computers to agree on the state of the system. To be confirmed, transactions must be packed in a block that fits very strict cryptographic rules that will be verified by the network. These rules prevent previous blocks from being modified, because doing so will invalidate all the subsequent blocks. Mining also creates the equivalent of a competitive lottery that prevents any individual from easily adding new blocks consecutively to the blockchain. In this way, no group or individual can control what is included in the blockchain or replace parts of the blockchain to roll back their own spends. And that is very important in my opinion, because if you trust a system, it has to work for everybody. You can't manipulate it. Nobody can influence it in any way. So that's why I love Bitcoin and crypto in general. Oh, you wondering, do I have a position in crypto? I used to, but I took some money off the table. But I have some altcoins which I still hold. I feel like as soon as I start saving up a little bit more money, I might get in back. And I think I talked a little bit about Bitcoin in one of the videos for, I think, CleanSpark, because I do a little bit of mining. So I can touch a little bit about that also here. So mining in future will be more expensive. It's going to be more hard to get one Bitcoin compared to, like, 10 years ago. So as time goes on, mining one Bitcoin will take more resources, and it will take more calculation cryptographically to get it. So that means the price will go up inevitably. And it's just a clear indication of supply and demand. When the supply is low, the demand is high, the price will be pushed up. So just that's one thing I would mention. If you have doubts, is you can average up whenever there's a big dip by a fraction. You can say, okay, I'll put 500 every time, every month or every week, whenever, and just average until you get maybe one Bitcoin. I think 10 years from now, if you have one Bitcoin, I'm sure you'll be smiling. That's a guarantee. And actually, that's a big plan of mine, to slowly build up a position whereby I can own at least one or a few Bitcoins and just have them in a wallet and just leave them there. I feel like I'll see some growth. So whenever there's a dip, I'll be trying to buy in a little bit, and not worry too much about it, and just build up until I have like a good sizable amount. I feel like it's a good way of investing, in my opinion. Back to doing your own due diligence, make sure you understand the whole thing. I wouldn't recommend you just buying Bitcoin just because you've seen its increasing price, or there's a dip and you think that's when you should buy. At 31,000 currently, that's a lot of money, if you ask me, for any average person. So be very careful. Don't drain your savings, or don't remove it from your stock market positions or anything. Just try and maybe save up slowly if you need to invest, or try alternatives like Ethereum, which is a little bit cheaper, which runs on the same technology, but a bit cheaper. So thank you so much for reaching this far. I wanted to talk a little bit about Bitcoin. I'm glad you guys joined in. We're growing the channel so fast. I'm really excited, and I'm really thankful for the support you guys have shown me. So thank you so much. Be green and be safe. Talk you to the next one.